Hello subscribers, today is Friday, June 10, 2022 and this is market recap for MasterChartsTrading.com. Please don't forget to hit the like button, subscribe to this channel and share this video with others. Again, this is what keeps this channel going, so truly I appreciate all the likes. Also, I apologize for the noise in the background. There's not much I can do at this moment, so please bear with me. If you have any questions, make sure to send them in or to make a comment. S&P 500 and all the stocks in general, indices kind of continued lower with a vengeance, and the junk that also sort of unraveled and are leading the stock market lower. We'll look at the short trade we did a few weeks ago for Royal Caribbean, and it's continuing down, so if you're a subscriber, congratulations. 10-year yields hit new highs on horrible inflation report, and dollar and gold both rally. So dollar rallied, we'll see why it's rallied, but gold also rallied at the same time. Can both of them be correct? Cryptocurrencies, I keep repeating this, but I think they're about to collapse. Ethereum actually just broke support, so look out below. Bitcoin maybe next. If you're a subscriber, please stay tuned. I'll send a separate video. We're gonna cover all of these various stocks, many speculative stocks. We're shorting many of the stocks already. We're also trading some forex, so stay tuned. And additionally, for the members only, there's going to be a new section for weekly charts, so stay tuned if you're a member. If you're not a member, go to MasterChartsTrading.com, click on sign up and sign up for one of the products that includes the newsletter. Alright, let's get to it. Looking at S&P 500, so this is daily chart. So daily means that each of these candlesticks, the red or the green candlesticks, means that it's 1 day's worth of price action. So this is what happened, throughout the day. Something happened, and we're going to have one candlestick per day. So that means it's daily. See where I'm hovering? It says D. It's very important. People still don't get it. Daily means how do we divide the time and sales. And in this case, we're dividing them by days. On this chart, you can also see the indicators. So you can see this green, blue, red, and yellow lines. I can turn them off, and you can see that it's more difficult to understand price action. If I turn them back on, it becomes crystal clear. So looking at this chart of S&P 500, first of all, how do we define a bear market? So many definitions of a bear market. To me, bear market implies a downtrend. So for stocks, and S&P 500 is a stock, I want to see a close below this yellow support resistance line. And it did indeed occur right there on 29th of April. Then when we have ascertained that now S&P 500 in this case is going down because we saw a close below this yellow line, we need to see a bounce, and then we can consider opening a short. So this is exactly what happened, basically last week and also this week as well. Actually, both of the signals were last week, but the stock market unraveled this week. So we had two short signals right there, and then big, huge selling really yesterday and today. And notice where we're approaching the new lows from the May. So if we look on the weekly charts, and this is the W, you see where it says W, I'm hovering over it. So weekly means that each of these candlesticks is now worth 1 week worth of activity. Again, on this chart, we have the indicators, the green, blue, red, and yellow lines. You can find out more about them by clicking the description line. Notice that since on weekly charts we have changed the time frame, we need to also change the length to 52. If we go to the daily chart, the length is 250. Okay, so anything less than days, anything days or lower, we keep the settings at 250. But if we go to weekly, we go 252. So notice what's happening. We're on the week of May 16th, we made a 52-week low. In fact, it's more than a year low. And now we're again approaching that level. So no doubt we're in a downtrend. I hear that Elon Musk already is freaking out and laying off people. And he is correct, because the way we read the chart, it seems that we are going into a bear market. So bear market implies lower lows and lower highs for the security. And it sure seems like we're about to hit new lows. I mean, this week, look at the size of this weekly candle. It's enormous. And it's very bearish. So this little shadow at the top, it means that the price came up, but the bears just pushed the price lower. And not only that, they continued to push the price lower until the very, very end of the close, end of the trading week, and we closed at the low of the week. So overall, this is a very bad sign if you're a stock bull. Most likely this low from 16th of May, week of 16th of May, will not hold, and we will continue lower. Looking at Dow Jones, basically a very similar picture. So bear market again started right there, April 29th. I went back to daily charts now. We had opportunity to short right there around 6th of May, 4th or 5th of May. Not a great opportunity, but this opportunity, you could have taken it basically here on 1st, 2nd, 3rd of June, even as late as 8th of June of this week. So that's another short signal right there. So, because the correlations between the various stock indices such as S&P and Dow Jones are very high, it makes perfect sense what's happening. People are just indiscriminately selling pretty much anything. So for Dow Jones, we can look at weekly chart as well. So this is a weekly chart of Dow Jones. I'll zoom out and I'll show you. But overall, similar picture. This low most likely will not hold from week of 16th of May. Looking at NASDAQ, we can look at daily NASDAQ chart. So daily NASDAQ, NASDAQ actually went into a bear market earlier by my system right there, 8th of March. We had a huge bounce and a nice short signal right there on 8th of April. Basically at this point, if I shorted NASDAQ right there on 8th of April, I would still be open. My short would still be open. Why? Because I would have probably, I would have advanced my stop to entry right there on 22nd of April, and then I would continue holding and trailing my short stop at the red line. So most likely again we're gonna break below this lows from May. And looking at Russell 2000, this is the weakest of the bunch. The Russell 2000 actually went into a bear market significantly earlier, right there, January 2022 of this year, and several opportunities to sell short. If you shorted right there 5th of April, congratulations again. And again, I would be still holding it because my stop is at the actual red line, and this stop is a short stop because we have to reverse our thinking for the downtrend. So overall, Russell, there's the Russell 2000 small caps index. Most likely the lows from early May here will not hold and will continue lower. I don't see this low holding. I mean, anything is possible, but the way things are going, and I keep hearing about tightening of the for the Federal Reserve, so most likely we will not hold low. So junk debt. If we look at high yield bonds, so I keep showing this chart basically. If we look at high yield bonds, this is JNK, and this is a monthly chart. So also, if you are just a very long-term trader and you want to use my indicators on the longer term, this is a monthly chart. So you can actually change the settings to 12 months in a year. Okay, so this you can trade it, same way basically. So junk debt, this chart, more important is this lower indicator here, the blue indicator. So overall junk debt, generally speaking, is positively correlated with S&P 500. Positively correlated means that they move in the same direction, by and large. So if we look at junk debt on daily time frame, bear market for junk debt started even earlier, right there, January 18th, 2022. We had no bounce really. We had very few feeble bounces, because what I want to see is I want to see a move towards the red support resistance line, but we never got there. Like for example, right there on 28th of February we got close. Another one, 29th of March we got close. And then yet again right there, 27th of May, just recently, after an enormous rally from the lows, we got pretty close to the level where we want to be selling short. But we haven't even gotten there yet. So this shows just how much weakness there is in the junk debt universe. We completely collapsed this week, looking at this chart on weekly time frame. Again, weekly time frame. Notice this huge candle from the week of 23rd of May. Basically we undid everything last week and this week and made a new low. So this is really quite bad if you are a stock bull. Once again, because of the correlations, high correlations between junk debt and S&P 500, it is reasonable to presume that junk debt in this case is leading the stock market lower. So if junk debt already made a new low, most likely S&P will do the same pretty soon. And that's why I think that this low from the May 20th will not hold. I wanted to revisit a trade we did. This is Royal Caribbean. So I wanted to revisit the trade. How do we think? How do we try to open the short positions? So in this case, Royal Caribbean, first of all, you see where I'm hovering right there, March 4th. It dropped below the yellow line. This means bear market. So I was waiting for a good bounce to sell it short. And we had a huge bounce. In fact, we topped out exactly at the blue line. And this is a bullish level. So if it closed above, like for example right there, 9th of February, then I would think, okay, maybe we're in a bull market. But we actually topped out. We didn't close above it. I'm going to zoom in. We got super close. We got right there at 31st of March, and then again 5th of April, and again on 20th of April. But then we couldn't get over it. So basically this is showing resistance. So this is how resistance looks like. And that's, if you're a bear, resistance is good. If you think that the stock is going down, then resistance is definitely good. So number one, good thing, resistance was exactly at the blue support resistance line. Then we need a signal. And what's a signal? Signal is a close below this red line. This is exactly what happened. It also happened to be on the day of the earnings, but the earnings were horrendous. So they're negative, so they're losing huge amounts of money really, and they have been losing huge amounts of money, but I guess they lost more money than they expected. However, I don't really care. I don't really look at those things at all. So this is the only thing that I was worried about. Do we have a signal? And yes, we had a signal on 5th of May. This is an actual alert to my subscribers. We got our target 2 days later, actually, right there on the 9th of May. But notice that our stop is at the red line. So again, we are, trailing it lower, but our stop is significantly higher still. So we haven't obviously been stopped out. And notice what happened in the weeks following. I mean, it just completely collapsed, and it just made a new low. And this is a multi-year low, by the way. And this is a 38% loss. So if you shorted it using, for example, put options. So what you do is you buy put options about a year out. And that's my, best idea I can give. Why about a year out? Because we don't really know how fast it will drop. Some people like to kind of give very tight time frame, so they'll buy maybe a month or 2 months out. But the problem is that there's a decay, it's called theta, time decay for the option. So I prefer to use further out, like leap options, maybe a year out. And this is, very nice move. So if 38% move for the stock, we need to triple our gain for the option. So easily 100%, possibly even more than 100% move if you used leap options, so about a year out. Again, congratulations to subscribers. If you're not yet a subscriber, consider signing up by going to the description and clicking on the link to my site. Also, don't forget to hit the like button, subscribe to this channel, and share this video. This is truly important. Thank you. We will continue now. Looking at 7 to 10 year treasury bonds. So this is IEF. I usually use TLT, but I kind of today wanted to look at slightly shorter duration treasury bonds. So once again, first of all, what's treasury bond? Treasury bond is a bond of the United States government, considered to be the safest security in the world. Even though it's safe, it doesn't mean it goes up, does not go up and down. And in this case, yes, it also goes up and down. So it's pretty obvious, right, where I would have been shorting this one. Take a guess where I would be shorting this security, right there. So we did not, trade this one, but what I wanted to show is, first of all, today we made a new low. Okay, so that means by extension that we made a new high for the treasury note yield. So this is we're already at 3.155%. This high we made intraday high. This is a multi-year high. So this means that we basically are continuing to move, interest rates continue to move higher, and most likely, this will continue, because I keep hearing that Federal Reserve is, set on increasing the interest rates. It does make sense because of the horrendous inflation report. I mean, we had 8% inflation, which is really bad. If you consider that we had very little inflation for the past, 20-30 years or so. It obviously has to do with gas, food prices, war in Ukraine. So it's like a perfect storm, basically, for everything out there, and inflation is indeed a big problem. So interest rates are going higher. This is what's called demand destruction. So what are they doing? They're driving the interest rates higher so that people are not able to afford, for example, houses. They're not able to afford, for example, cars. And as a result, demand goes down. If the demand goes down, inflation will decrease. It's logical. The problem is when the demand goes down, the stock market also goes down, and this is exactly what we're seeing. You see S&P 500 collapsing, etc. So this is a demand destruction, the flip side of the demand destruction. Yes, it's a very blunt tool. So we're going to destroy the demand, but at the same time we're going to most likely destroy the stock market. So I guess it's very interesting to see what they're going to do, how they're gonna walk this fine act of on one hand they're trying to tamp down inflation, and on the other hand they're trying to not completely collapse the stock market, but I'm not sure it's possible, honestly. So prepare for some very interesting times. It's a Chinese proverb, may you live in an interesting times. We are living in this interesting times because of the various things, like for example, now there's monkeypox of all the things. Okay, let's move on. Dollar index, DXY. So let's look at dollar index first on the weekly time frame. So it's again very obvious with my indicators of what to do when. If you're a beginner trader, intermediate trader, advanced trader, it doesn't really matter. But for people who are just starting out, this is a godsend. I keep hearing this from my subscribers, is that, oh Alex, this is just so easy. I mean, you cannot not see this. So on July 13th, 2022, this is a weekly chart, so a week of July 13th, 2022, the dollar index broke above the blue support resistance line. And this is all I need to know. I don't need to know anything else. And this is July 2021. This is a year ago. It's actually 21. I should say 21. This is a year ago exactly. And from then on, we just sit in the position. Our stop is at the blue support resistance line, so we technically are in this position. It went up as far as 12%. So against other currencies, and we can look at other currencies later on, and we are trading other currencies. So for example, this week we actually have alerts on the Canadian dollar, Australian dollar, and Swiss franc. So if you're a subscriber, stay tuned. If you're not a subscriber, consider signing up by going to the description link. So when they're tightening the interest rates, in other words, they're increasing the interest rates, we are seeing dollar appreciate. It makes sense because people want to get, higher interest rates from their dollar investments, and so they're converting their euros or yen or Canadian dollars into United States dollar, and they're keeping it at higher interest than, let's say, in Europe, where the interest is actually negative. Still, we're about to go to zero, which is a big deal apparently. So when we're hearing increasing interest rates, it is beneficial by the Federal Reserve. It is beneficial for the dollar. So we're seeing appreciation of the dollar. Now, if we look at gold divided by US dollar, so very important to understand this. This is how currency pairs work. We have XAU divided by USD. See where I'm hovering? Gold divided by US dollar. So if the lower part of this equation gets bigger, it will pull this currency pair lower. Indeed, this is what's been happening since March 7th. But today and this week also, so let's look at today's action first. I actually send this to my subscribers as well. So let's look at what happened today. Big candlestick today, right there. We touched this red support resistance. I'm gonna turn this off for a second. So today we touched this red support resistance line. To me it's really good because it looks like support was reaffirmed in this case. And even though technically speaking we did break below this red line on 12th of May, I actually did not send this alert. I just wasn't sure about this. And I think I was correct, because right now what we're seeing is bottoming. I think we're bottoming here. Now additionally, these two candlesticks together, so we have this red candlestick from 9th of June and today's huge green candlestick. So what's happening, it engulfed the previous candlestick. So this is a bullish engulfing pattern, and today's candlestick is a hammer candlestick. So why is it a hammer candlestick? Because it looks like a hammer. There's the handle and there's the actual hammer. I think we are bottoming here, and even though the dollar is appreciating, I think gold is sort of separating from this currency pair equation. So I think both are correct. So in the beginning of the presentation I asked which is correct, dollar or gold, because they both rallied. And I think in this case I think both of them are correct. So gold is bottoming here most likely. So I think we may resume uptrend for gold. So let's look at the weekly time frame. We almost made a all-time record high. I don't think it's the all-time record. I think the all-time record high is right there on 3rd of August. So I think, and also looking at weekly chart, this is also a hammer candlestick from this week, and also bullish engulfing pattern as well. So it's both weekly and daily bullish engulfing. Bull market technically is above 1923, so I think if we close above that level we will continue higher. This previous alert from 21st of March, week of 21st of March, I think has failed because we did close below the 9th of May, below the red line here on the 9th of May, but I think we are bottoming. It sure seems that way. So let's look at, let's watch the price action in the near term, but overall I am more bullish on gold than I was just a few weeks ago. And looking at gold miners, same thing. This is a weekly time frame for gold miners, and this is an enormous candlestick. Also a what do you call it? Also a hammer candlestick as well. So this is representing a bottom, I think. All right, let's look at Bitcoin. So here's Bitcoin on weekly time frame. Don't forget, this is again a weekly time frame. I put in this, I'm gonna get rid of my indicators. We're clearly in a downtrend. You can see downward facing arrows. Why are we in a downtrend? For securities like Bitcoin and Forex, I use the red line as a line in the sand. So entry into a bear market was right there, week of January 3rd of this year. Several opportunities to sell short. Latest one was just enormous. It went from 42,000 to 29,000. So currently we are breaking below this level. So this level is from 21st of June 2021, right there. And I think if we close below it, I think we'll collapse. I keep saying the same thing, and I'll show you why. So looking at daily time frame for Bitcoin, here is Bitcoin on daily time frame. You can see that we've been moving sideways basically since 9th of May right here. We've just been doing nothing but moving sideways. But the way this thing is acting right this instant, I think it is the charm. Now is the charm. You can see we had 1, 2, 3, 4, 5 weeks of testing this level. It's marked by this purple line. And now I think we are finally breaking below it. So since Bitcoin is traded 24/7, we still have 2 days left in this week. So let's see what happens Sunday. But the reason why I'm quite optimistic about this collapse, if that makes any sense, is because of Ethereum. So looking at Ethereum, it is already significantly below this. You can see it's kind of like this blue line that I marked at 20, and this is again also a lows from June 2021, and we are below it already. You can look at daily time frame as well. Notice today's action, it's not good. It's breaking below this recent range. So I think if Ethereum goes, I think we can see a drop for Bitcoin as well. Alright, that's it for this week's recap. If you're ready to sign up, look in the description of this video and click on the link to go to MasterChartsTrading.com, then click on sign up. So I have 4 different packages, and basically I have 2 products. One is trading indicators, so these indicators that you can see on this chart, this green, blue, red, and yellow line. So for example, for Royal Caribbean, we shorted Royal Caribbean right there on the 5th of May, 37% gain. And the only thing we need to know is whether or not the stock closed below this red support resistance line. Now, if you want the newsletter, then sign up for that. We're trading various stocks, we're trading various forex instruments. In this episode, we're going to cover various stocks. You can see Alibaba, Baidu, Bumble, Trip.com, Tiva, Take-Two Entertainment, Western Digital, big stocks, GameStop as well. So if you're a trader or just want to find out more about trading, sign up. I have 2 newsletters, and they're included in this newsletter package. And again, if you have the best deal is to get trading indicators and newsletter together, $59.95 per month. I think it's a great deal. And if you need kind of individual help, then I have another package where you get 60 minutes of one-on-one screen sharing sessions per month, and that's at $259 per month. Any questions, please leave a comment. If you want to send me a message, you can also do that on TradingView, where I'm hovering right now. That's the message icon. You can use that to send me a message, or you can also go to MasterChartsTrading.com and click on contact and contact me that way. Okay, thanks for watching and have another great trading week. Please don't forget to hit the like button. Bye bye.